Todd, so when you look at how oil prices are trading, are you a little bit bewildered that we're stuck in this range?
Good morning, Scarlet. You know, as I look at oil, I thought that the range is solid, 47, 48 to 55. I think we pulled down here a little bit. We had, obviously, last week we had an overbuild based on the EIA report, but I'm a buyer here. I think that, you know, we've got a great chart setting up here. I think the lows are in. I go back to that Citigroup call and Schiller's call of $10 oil. I think those are guys that are really looking to buy oil, not sell it here. I think what we're really seeing is the market should be breaking a lot harder based on the overall strength of the dollar. That should be over on the overall call by Citi, the call by J.P. Morgan, Goldman Sachs, and Schiller. Why aren't we down at $35 a barrel right now? Because the truth is that there's still a demand, and the real effect on oil here is the overstrength of the U.S. dollar. But what we're starting to see is major companies, Halliburton, Schlumberger, although probably under a little bit of pressure today, are starting to have made bottoms and are starting to go back up. They're going to start to adjust for this oversupply in oil. And, you know, we'll see. Rig counts will go down. Refining will go down. They're not going to let these prices fall too much farther from here, in my opinion. And I would, just full disclosure, I was willing to buy it at 50, but I'm getting a better price now. I can buy it at 48.50.
All right, got it. Nice way to put that into perspective. Of course, though, when you look at the broader economy, we've got Janet Yellen speaking to Congress later on this week. To what extent is oil a hostage of the bigger macro trends that the investors are grappling with right now?
You know, I think if you look at the big macro trend, we've certainly come way, way down from 107. And where were the big sellers when we were 107? You know, typically analysts upgrade at the top and downgrade at the bottom. So as we pull down here, I think we made a nice bottom somewhere around that 45 area, you know, 43 to 45. It could sneak a little bit lower, but I think that's real solid. The big event here is that we're starting to build basically a base and moving our way higher here. And Janet Yellen, you know, speaking at Humphrey Hawkins on Tuesday and Wednesday with her testimony, could create a little problem because the dollar has been exceptionally strong here. The real problem here is the dollar. That's what the real focus has to be, is the overall too much strength of the dollar. And the Fed cannot raise rates, which I think will weaken the dollar. And then we can start to see oil pick up a little bit better as well.
Gotcha. Todd, very quickly here, we want to get to our word of the week. We talk about oil there. Contango phrase comes up often. How does that factor into what we're seeing right now? Why is it important now? And what is its relationship to another word that we often talk about, backwardation?
All right, well, backwardation is what we were in last summer when we were at 107. The current months were much higher than the back. Now, as we go forward, if we go to next March's oil is trading at $63 a barrel in next March, okay? So what it is, it's trading to a premium. That's a normal rotation. That's called contango. So there's premium building forward, making oil more bullish.